And we are live. What's going on, guys? It's Ricky with Technical Solutions. Hope that you guys are all having an amazing Wednesday. Today, it is the FOMC rate decision, which is in the next 6 minutes. I'm going to start sharing my screen so you guys can see exactly what it is that I'm looking at. We got QQQ up 0.39, 0.38%, still showing signs of an ascending uptrend pattern. I don't know how, but again, markets are incredibly bullish and holding up very well, even with the expectation that the Federal Reserve is going to pause once again. So in the next 5 minutes, this should be getting factored in. And then 30 minutes after, Jerome Powell should be going live for the FOMC press conference. For those that are tuning on in for the first time and don't really understand what's going on, what's the point of today, what's the importance between the FOMC rate decision. So the Federal Reserve meets together and announces a rate decision almost every single month. And with this announcement, they determine if they're going to be raising, cutting, or pausing interest rates. So what does the stock market prefer? And what would cause the market to react in a positive way? Very simple. The market would want the Federal Reserve to start cutting rates. Because if the Federal Reserve starts cutting interest rates, this means that interest rates for you and I, for businesses, and for the United States will be less expensive, meaning it could encourage or promote growth. Because if it costs less to borrow money, it's less of an expense, and we're more likely to borrow more, therefore boosting the economy, boosting spending, and boosting investing into whatever it is that you see to be fit. With that being said, the best case scenario for the market is that they've been asking the Federal Reserve and Jerome Powell to cut interest rates. As of right now, there is a 96.8% probability, according to the Fed Rate Monitor tool, that the Federal Reserve is going to pause, meaning that they're not going to raise interest rates, but they're also not going to cut interest rates. There's a 3.2% probability that the Federal Reserve is going to cut. So again, we should know this in the next 3.5 minutes, where it will get announced, and then we will determine, the market will determine if it wants to react in a positive or bullish way. As you've seen today, markets have been kind of choppy. I don't know if this is because of Microsoft and Meta reporting earnings after the market closes. I was thinking of going live. I'll kind of leave it up to you guys. If you guys want me to go live, I'll do it. If not, this will be the last live stream for the day. But there's a lot going on today. And I don't know when the last time it was that I did this many live streams. We did our LPP live trading session this morning, and that was a lot of fun. I do that every single morning at market open. And then now we have this one, which is the FOMC rate decision, and then the FOMC press conference, which is 30 minutes after. And let me explain that. So the FOMC press conference is 30 minutes after after the Federal Reserve announces their rate decision. So in the next 3 minutes, it's going to get announced. And then 30 minutes after that, Jerome Powell, who's the head of the Federal Reserve, will be going live and answering analyst questions, pretty much explaining why the Federal Reserve decided to do what they did. And he will do that for about 30 minutes to 45 minutes. That's when a lot of volatility gets injected into the market. Depending on what he says, his tone, and how the market interprets that, you and I don't have to agree with what it is that he said, but based off of what he said, markets can react either in a bullish or bearish way, depending if he says anything out of place that was not already factored in. Jerome Powell is very careful with his words. I would say he is the opposite of what Trump is. Trump likes to talk a lot. He is a professional yapper. Jerome Powell is not. Jerome Powell is very calculated. He's a man of few words when it comes down to being asked questions, and he does not speak out of turn, right? Some people don't like him because he's not bending the knee to what Trump wants, but that's the whole point of the central bank. They're nonpartisan and independent. They're not supposed to be influenced by any presidential figure. It's the whole point of the separation of power. But I don't think that gets through the head of some MAGA people or Donald Trump, right, with all the threats that they make. Nonetheless, market has been trading the way that it has based off of these threats, and thinking that they would apply enough pressure for Jerome Powell to actually start cutting rates. So we'll see. Jerome Powell is expected to finish his term on May of 2026, and he will most likely finish his term. All the empty threats from all these officials that state that Jerome Powell is going to quit or resign, it's all BS. It's just to manipulate the market and get you excited for something that's never going to happen. He's going to see his term up until May of 2026 because there is nothing that the President of the United States can do about that. So let's go ahead and see how the market reacts. We got 15 seconds left. Okay, here we go. 3 seconds, 2 seconds, 1 second. And I mean, it's going to be a rate pause, I would assume. It's just how does the market take it? Bullish? Steady as it goes. Watch the market push up just because it can. Wouldn't surprise us, right? Markets will push and rally for no reason whatsoever. The Federal Reserve chooses to pause, we rally. The Federal Reserve chooses to cut rates, it would skyrocket. There's literally nothing that can be shared in the market right now that would cause the markets to drop. That's how irrational they're being right now. Yeah, it's unchanged. It was previously 4.5%. Expectation was 4.5, and it came in at 4.5. To me, this is going to be a fake out. I think that there was optimism that there was going to be a slight chance that the Federal Reserve was going to cut. I think we'll see a retracement right before Jerome Powell begins to speak. That's just my opinion. My opinion doesn't mean that you should trade off of that. It's literally just my opinion based off of what I've seen in the past before. When Jerome Powell speaks, that is when most of the volatility tends to present itself. So we'll see. So Ricky, back in December, wasn't there a rate cut? The markets had pretty big red dates following the news. So wasn't there a rate cut and the markets had a pretty big red day following the news? Again, markets react differently based off of different... There's times that a rate cut was not expected and then the market can react in a very specific way. Like, there's always an excuse on why the market does what it does, right? I thought you were going to ask me a question of, Ricky, I think someone else said it, of, will Jerome Powell cut rates back in when Biden was in office of 2024, but he's not cutting rates for Trump? It's always like he did it for him, why can't he do it for us? I promise you, Jerome Powell doesn't care about you. Right? It's not about you. It's not about us. He made it very clear. Jerome Powell said that he would have cut interest rates if tariffs were not implemented. But because tariffs have a history of being inflationary, the Federal Reserve decided to be more cautious. Right? It's like if you're trying to put out a fire and the fire is finally getting put out, but then all of a sudden, you get a big magnifying glass on a bunch of dead leaves. It's not that it has to catch fire, but it's known to. So you're just going to be more cautious about it. That's the whole thing. Why would Jerome Powell, it's not even just Jerome Powell. People think that it's just Jerome Powell that gets to decide who cuts rates or who raises rates. It's a committee. They vote on it. It's like 11 or 12 of these people come together and they cast a vote. And even if Jerome Powell was replaced, which he isn't going to, I promise you, they would still continue to pause rates because one person would not change that. And it's very simple to understand when you're not so opinionated on the bias of, oh my God, he's just against us. He's had a target before Trump was in office and he's stuck to that same target. So I think it's just important to understand the facts and not just be so influenced by your opinion. or your emotions. Yeah, we're seeing a little retracement. It's testing the moving average. I want to see more. It's holding up very well still. It's still a strong ascending uptrend pattern. I think markets have no reason to be holding at this level. No reason. Okay. Trump needs to fire Powell already. He can't. He can't. That's so. You guys are so silly. Okay. Powell needs to fire Trump. That's what I would like to see. I would like to, because obviously he has no influence on Trump either, right? But it'd be funny if Powell or the Federal Reserve would play the same game that Trump plays. You know, back to the President of the United States. Just how we all know that Trump has no power against the Federal Reserve. It'd be so interesting to see if he took that same energy and how he would, take it. What's the decision? Pause. You guys all should have access to this. If you're all watching on desktop, I'll share the link with you. This is the real-time economic calendar. You just click on today and it updates every single day. You can click on this week and then it lays it all out for you on a weekly basis, or just for today, all the series of economic reports that are being released today. So today, again, it's the FOMC rate decision, came in at 4.5%. So you guys can either look it up yourself. It's techbuttsolutions.com/trading tools, or I'll pin it, or I'll post it here for you in the live chat. Okay. All right. Okay. We must watch this conference talk. We don't have to. Do you guys want me to stay live for the FOMC press conference? I was going to, right? It starts in 23 minutes, so I understand that it's still going to take some time from now. But I don't have to. If you guys are good with where we're at now, we watched the market react as little as it did. You guys let me know. Okay, we have 2,000 of you guys here. Let's see if we can get 1,000 likes on the video. And we'll stay. Ricky, what do you think about Meta? I think Meta is a very strong company. I think fundamentally and technically it's a very strong company. My only concern is the overall state of the market. I think overall markets are overbought. I think there's obviously a few really large companies that are pushing the markets to new all-time highs. But as soon as that begins to turn around, it's just going to drag down the market and everything else with it. So do I think Meta is a good deal long term? No, I don't think Meta is a good deal at $700 per share. But I think Meta is a very strong company. I would rather have a beginner, again, still not at these levels, but a company like Meta or Microsoft. They're solid, strong companies that are continuously showing signs of growth and producing a ton of cash. I think fundamentally that's just a very strong, metric to pay attention to. So I think based off of its track record from what we saw, we have it pulled up here. Look at the amazing track record of beating earnings per share and beating revenue. It's a very well-run company. It's not just for Meta, it's also for Microsoft. Now, don't get me started, right? Now there's Robinhood. Robinhood, in my opinion, and that's all it is. You don't have to agree with me. If you think Robinhood is super cheap and it's the future, buy it, right? Buy it and buy as much as you can if you think that it's such a good deal. I think that it's overhyped up. I think it's all over the place for a specific reason. I think that it reacts very in a very volatile way for a specific reason because it's an incredibly volatile stock. I don't think it belongs at these levels. I think it is improving as a company, but its valuation does not match its current performance as a company. So, but again, that's just, I think that just like we've seen in the past before, Robinhood does very well during these crypto bull runs because of trading activity. But then when reality sinks in and markets correct themselves, Robinhood crashes 50 to 70%, just like Bitcoin. So take that for what it is. If you think that it's a really good deal, I lose nothing by you buying Robinhood. I'm just here to make you aware that I think it's overbought, and that's it. So record tariff income, lower gas and egg, and overall prices, housing markets are dumping, but no rate cuts make sense. I don't wait, do you understand why the Federal Reserve would cut rates? You understand that it has nothing to do with, no one cares about tariff income if it's the consumer that is paying for it, right? You know, it takes time to track inflation, and we have 2 consecutive inflation reports that are going up. It's mind-boggling to me how stupid people can be, that they just reiterate the headlines that they see on Twitter and they think that it's true because it sounds good. What has been the reason that the Federal Reserve has, been looking for to cut interest rates? Their target has been 2%. That's all. Their target has been 2%. Are we working away or towards the 2% target? We're now working away. Inflation has 2 consecutive months of rising inflation. Housing prices are dropping because there is no demand, because it's expensive to own a home. That's not a thriving economy. It's political, quite clearly. Again, I think that's fine. If that's what you guys believe, that you guys think it's political, I think that it's kind of common sense, where if you begin to raise tariffs like it hasn't ever been seen before, right? Just like how Trump likes to say, the Federal Reserve's job is to be cautious, and that's what they've been doing. That's why they are more cautious now than they've been in the past before. I think it's really good to have some common sense in markets like this. See, MSTR. Is it popping up or what's going on? It's at 402. There's nothing new going on here. A retracement from 460, lost about 10%, but it's testing a major support range at 400, but it's still a descending pattern, so no confirmation of reversal. It just needs Bitcoin to do something significant so it can act as a catalyst to drive the price up. Or if Bitcoin begins to fall, then it'll break that support and we'll begin to see the retracement. I like looking at the bigger picture. It kind of gives you a different perspective. The possibility for it to rally or the possibility for it to drop. Why don't you short hood? I would, but I don't normally like to short right before an earning report. So I'll wait to see how the market reacts, and if I see there to be a trade opportunity, I'll take it. It's up 3.56%, but it's holding very well. So this is an overbought reversal with no break of pattern. So there's no reason to short it if there is no active break of pattern. What's going on, Stud City? What's up? What's up? Wish Bull would perform like Hood. Well, Bull is a newer company that's publicly traded, right? So I think that if you look at the history of Hood, I still don't think. I mean, Hood is just rather unique. It's one of the bigger ones from when it was released, right? But it had a very similar setup. It pumped when it first IPO'd, and then it dumped 90%. So that's my concern with a bunch of IPOs, is that in today's day and age, markets are easily manipulated and they just drive prices to insane valuations for no reason, and then they dump it on the bag holder, right? Just like they did on GMC, just like they did on AMC, just like they do on all these like Reddit traders that don't know how to take profits. They're always the ones that end up, left holding the bag. Then it sells off, it finds its support, but then Robinhood really began to turn things around. It didn't just become a stock that was a good performing stock technically, but also fundamentally it began growing as a company, which again, it kind of grows into its shoes. And that's what we would all hope for maybe Webull, right? I just don't think Webull has the same momentum that Robinhood does. I think Webull, because it's smaller and more easily manipulated, it can just have that stigma for it. What do you think about Trump announcement about rate cuts in September? I haven't even seen. Is that a tweet that he just sent? I don't know. I haven't seen it. The dude says anything that comes to his mind. So he has no control over rate cuts. I would say that if economic data supports it, just like Jerome Powell and everyone else that's part of the Federal Reserve has said, right? If inflation actually does begin to go down and tariffs show to not be inflationary, then yeah, that would support a rate cut. It'd be common sense, right, to start cutting interest rates. Because that would be great, right, if economic data supports it. But it's not about opinions. It's not about what other countries are doing. Other countries are not us. Other countries are not experiencing the same data that we are. Other countries didn't implement 100% tariffs, in just 1 month. So there's different steps for different countries. And even the United States, right? When Jerome Powell went in this European Union's central bank forum, there was like 3 or 4 other presidents of their own head of the Federal Reserve, and they all agreed with Jerome Powell and his decision to pause rates. They all agreed with his, ability to not comment on what Trump was saying about him, and they all recognized him for, in their opinion, that they would do the same if they were in his shoes. So, I'm not here to say that the dude's perfect, but I would say based off of what he said and what he is doing, it's aligned very well, right? There are no surprises. He doesn't speak out of turn. He is not outspoken. He doesn't comment and go on Twitter and say, hey, now's a good time to buy or invest into the market. He's not that type of troll like many of our other politicians. He just does his job and he focuses on the data, and that's all. And I respect that. Who's paying you to show all the love to Jerome Powell? I've said that from the beginning. What is it? We've been watching FOMC rate decisions since 2020, 2021. I think that was Trump's end of the first term when inflation began to skyrocket to 9.1%. That's when the Federal Reserve or monetary policy, in my opinion, became a little bit more of the forefront of the stock market. So since then, I've paid attention to Jerome Powell. I've always said that I like how he carries himself. I like how that he's just not outspoken. It's been made very clear that he knows the influence that he has when he says anything, and I think that's why his word carries so much merit, because when he says anything that is either bullish or bearish, hawkish or dovish, as a lot of analysts like to say, markets react, because he's not just an opinionated, chaotic person on social media that is posting on Twitter every 5 minutes when he has a temper tantrum. He's calculated, he's a man of few words, and he does his job, and he does it pretty well. Fed building construction, Ricky, the one that was approved by the government, the budget was fully approved. Is it the video that we all saw where Trump lied about a building being built and it was built 5 years ago? Is that the construction you're talking about? Where he, in front of the world, clearly lied with the other politician that was there with him, just to try to pin. I couldn't believe that was a real video. I was like, how embarrassing is that to see that the president, in front of everyone, tried to corner Jerome Powell and ambush him with a question that just backfired so bad for him. It's like, I literally thought it was AI. I rewatched the video like 10 times because I was like, there's no way that he's that stupid. There's no way that he's that dumb to try to call out someone on a building that was built 5 years ago. It's clear as day he doesn't understand what he was doing there. I was genuinely surprised. I thought Trump was much smarter than that. And when I saw that, I think it's very clear that he will say and do anything to try to make a point. I love how people are still defending him. That, Trump was given false information. Trump's at the building. Here's a crazy idea. Don't talk about something that you don't understand. Easy. I love how people get offended. They ask me a question, what I think about something, and then when I give them my answer, and it's just my opinion, that's all it is, and you get so triggered. I want to remind you, I voted for Trump. I've been very open about that. If you guys followed me on social media, on Instagram especially, I made it very clear I was not voting, nor did I agree with Kamala. I still don't agree with her. My thing was the two options that I was given, I thought Trump was the better option. But I'm an individual. And as an individual, I think it's important that anytime that I disagree with something or someone, as I disagree with any person, right? I'm not going to see eye to eye with everything someone else does. That's the whole point of being an individual. I voice it. It's insane to me how crazy people are in supporting Trump. It's a cult. It's truly what it is. I don't care that I voted for him. I don't need to agree with everything it is that idiot does. I don't. If he does something stupid or says something stupid, call it out for what it is. Why do you have to be on your knees for him and everything it is that he does? He's not a sports team. He's a human. He's going to make mistakes, and I understand that. But for you to think that everything it is that he does is always in your best interest, explain to me how him coming up with Trump coin that has made him $2 billion is in your best interest. Why do we have countless people, countless Americans complaining about our politicians being corrupt and a form of insider trading because they enrich themselves because of their position of power, but then you overlook what Trump is doing? How is that okay? How is it okay that you allow the president, while he is in office, to promote a meme coin? It's just, if it looks like shit and it smells like shit, what is it? It's shit. So as soon as that meme coin came out, my attitude and my tone towards Trump began to change, because I really thought this time around he changed, and that's just what I thought. I really thought that what he was doing was for the Americans' best interest. There's still things that he does that I agree with from time to time, for sure. When he closes deals and it makes sense that it's truly in America's best interest, I'm all for highlighting that or celebrating that. But as of right now, all it is just a bunch of baloney. Cancel Ricky, he voted for Trump. I don't think it would be much of a surprise for people for them to find out that I voted for Trump, right? You guys know that I do well, and there's obviously a reason I would vote for him, because of what I thought he stood for. The part that like baffles me is that the whole point of tariffs were to get rid of federal income tax. Where's that energy? Why are you celebrating tariff revenue like it matters to you? There's like this lady here that I don't know what her name is. That's the part that doesn't make sense to me. Why are you celebrating tariff revenue? You understand that it's the consumer that is paying for that as it comes in, right? Like small businesses, like if you have a small business, if your buddy has a small business, if your friends have small businesses and they import goods outside of the US, they get hit with a little tariff as of right now. That is the revenue that is contributing to the $28 billion they made, or whatever it was, right? The whole point of that was to offset federal income tax. So now not only are we paying federal income tax, but now we also have tariff revenue or tariff tax. It's like, holy shit, man. Talk about getting smoked. I'm paying for tariff revenue out of pocket. Again, I was actually thinking, I don't care to enough. I might do it later down the road once I see that inflation data does support it. But I have friends, obviously, that, run e-commerce brands, and, their business has been heavily affected based off of these tariffs. Even if it's a 10 to 15% tariff, it might not sound like a lot, but a lot of businesses, especially nowadays in this tough economic condition, 10 to 15% of your margins being gone, that could be you closing your doors for some businesses if the margins are that tight. But again, people don't like talking about that. They just like to celebrate Trump for the numbers, but it doesn't change anything about your life. What's the point of celebrating tariff revenue if you're still paying federal income tax? That's the whole reason he campaigned. That's what he campaigned for. Like that. Yeah, we have a lady named Dorothy going off about too late Powell. Literally, they have like these minions. Like, Dorothy, I could just picture what she looks like. And they have these like minions that just mimic and reiterate the same BS over and over again to try to convince you that what Trump is doing is right. Fucking crazy, man. All right, let's pull it up. Here we go. Fomc press conference. So again, in the next 30 minutes, Jerome Powell will be going live and answering analyst questions. This is a pretty volatile time to be paying attention to the market. if you're a beginner, I personally would not recommend for you to have an open trade during this time. If you think that you're up for the challenge and you think that you can tolerate it, be my guest. But again, quick changes of direction happen all the time. You do have to be a little bit more proactive. And that's just my little heads up for those beginners that are watching. Okay? Dorothy Lambert is asking, why are Big Macs $12? Dorothy, because people like you continue to still eat there. That's why. Girl. You sound like a Big Mac. I bet you look like one too. Here we go. Dorothy needs your free Adidas. Yeah, she might need to be taking a few steps after all those Big Macs. Here we go, JP.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective.
Yep.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, here we go. He pretty much has a script that he reads.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So, just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's going on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Markets dropping.
Hi, Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest
There we
pace since
go.
22.
That's the bull trap we were talking about.
Interest-sensitive sectors.
I want to see everyone that was talking crap about markets going up and buying into the highs. I want to see you keep that same energy. Show your position.
GDP and PDFP numbers
Let me see
came
it.
in pretty much
Dorothy,
right where we
where you
expected them
at?
to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP.
It's testing support at the moving average, so we could easily find a support here, but this is a great reminder that during FOMC press conference, one moment we could be pushing up, one moment we could be selling off. This is not a time, in my opinion, that beginners should be trading. I don't care if you're going long, I don't care if you're going short. It's a very volatile time. Please just be very mindful and be very careful with your position, okay?
Any statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course, will be watching that carefully.
Thank you.
Yo,
Colby Smith
Colby.
with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. as I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you asked about the June SEP, I wouldn't, you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September, monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean I wouldn't insist upon that. But I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do too unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is
NASDAQ
accomplish
market
that
dropping
in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, I don't want to put this in terms of you and the president, so let me ask
NASDAQ
it this
market
way.
dropping.
Do you have concerns about the cost of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good for, if we did do that, it
Testing
wouldn't be
previous
good
support
for our
range, just a
credibility,
heads up.
nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria.
Hi, Victoria Guida with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Of course.
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over and to visit a building, but it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. Was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Andrew.
Do you like how
Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation,
That's a good question.
when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation, sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through.
NASDAQ market
In
dropping.
addition, now we have 3 or 4 tenths of inflation in core.
A friendly reminder, right now market conditions are more in favor of the bulls. You guys know that I like these little celebrations of markets retracing. Don't get that confused with thinking that you can be greedy. If you're shorting, in my opinion, make that money and bounce. I would take profits as it approaches or shows signs of a potential support. It's just my 2 cents. You can be as greedy as you want, but again, this market is more bullish than it is bearish. If you choose to short, in my opinion, you need to respect that. I hope that, yeah, that makes sense.
And we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration's proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too, so it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Testing a major support here.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business.
Let's see if it
How
goes red.
concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is
The
giving...
wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay, this delay though, where you're saying there's a one-time price increase for tariffs, I would say, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover though to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't.
So if
but what do you know? The price of dryers went up too, just like washing machines. So companies will often they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be.
QQQ dropping hard.
And
market's about to go red.
They may be less than people estimate, or more than people estimate.
The Dorothy train pulling through. Choo choo.
Consumers will pay some of this.
$12 Big Macs.
Businesses will pay some of this. Retailers will pay some of this.
Love to see it.
But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right?
Wow.
We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed's rate.
Whoa.
It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things going on in the housing sector, and one of those is just there's a kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize. So
reducing?
I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us.
There we go.
So far, not very far away.
Love to see it.
Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back
Looks
nearly the
oversold
target?
though.
Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it's.
I'm buying
it
to
could be
cover. I'm
any-
covering
any
my
of those things, right?
short.
But
I'm not
you know,
buying to go long, just so you don't
if
get it
saw
confused.
that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So
We're
that was
dropping.
a time when
Look at
policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll just it'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting. Will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down?
I think
closer to 2.
We'll look at everything. It's.
There we go.
A pretty
There we
reasonable
go.
base case is that this will be
Lock in
a one-time price
profits.
increase, and in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't. Again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire.
Watch for support.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target.
So this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and the Treasury only speaks to the dollar. It's not something that's been a topic of major discussion at all at the Fed. I wouldn't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar. It would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the US economy? Thank you.
Yeah, we're monitoring the situation. We do, of course, as you know, during the pandemic, we looked at a whole lot of new.
I love how people in the live chat, the people that were encouraging everyone to buy at all-time highs, are like, I can't believe you're celebrating a little retracement. I don't think anyone here is shorting QQQ. You're right. That's just a small drop. It's for the principle. It's right before this FOMC press conference. What did we say? Hey, we don't think that this is the safest time for beginners to be trading. Always, we try to look out for beginners, while everyone else tries to encourage beginners to buy at all-time highs, So now you have to kind of cover yourself and be like, oh, well, now I can't believe you guys are just celebrating a small retracement. Who's celebrating anything, right? Maybe me. I have a different short going on. Beginners shouldn't be taking the short that I'm taking. But again, if it offends you to see other people win, please do yourself a favor, log off. You don't need to be watching. You can just trade on your own, right? There's nothing wrong with that. If you're going to be so negative, just because, again, markets have been so incredibly bullish since, April? One little retracement and you get offended? Come on now. You can't be like that. You're acting like Dorothy. Go get your $12 Big Mac.
On the data and the evolving outlook, the balance of risks and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Maria Eloisa.
Wow.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News.
Whoa.
You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates
I'd be mad
rising
too.
for upper income households.
I would be
How
mad
do you see
too.
that evolving in the next few months? How much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has.
Here we go. Watch
I
for
would
the break.
say, if you talk to credit card companies, for example, they will tell you that the consumer is in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing, but so generally, if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true, and it was again right in line with what we expected. The GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question.
NASDAQ about to make new lows,
and we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even low, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance. Oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor forces is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits. Look at wages.
Yeah, let's wrap it up because Jerome Powell has still like another 7 to 8 minutes. I'm not going to be live streaming the whole thing, but this is a really good question just for the beginners that are tuned on in. I'm new. Can you explain why the NASDAQ is dropping so much? So the reason that the NASDAQ is dropping so much is that because it was pushing up so much based off of the expectation that the Federal Reserve was close to cutting rates. With what Jerome Powell just stated, markets are now readjusting. Remember, the understanding you need to have about the stock market is just like Dorothy, it's greedy. It always gets ahead of itself. It always factors things in advance before they actually happen. So when something like this is now reinstated, it needs to now readjust because there shouldn't be any expectation of a Fed rate cut anytime soon because economic data doesn't support it. He's been making it very clear. What the stock market does and what it likes to interpret ahead of time is not Jerome Powell's fault, right? As you saw today, Jerome Powell does not like to speak about what other people are saying. And even when asked about, do you think that Trump visiting the Federal Reserve building was a target to try to apply pressure? He didn't even want to comment on that. He said, we were happy to show him around. We were actually very grateful. You can just see that there's a difference in how you treat and speak about other people when you have that power, that influence. He is not outspoken. He does not go on Twitter and complain about anything and everything. And it's just two different types of individuals. I prefer someone like Powell. Other people might prefer people like Dorothy, like to be very outspoken like Trump. But that's the beautiful thing about the world we live in today, is that there are different people for, your personality. And for myself, I think that because of how much influence Jerome Powell has, imagine that we lived in a world where all he did was comment, buy now, sell now, and was super outspoken and talked trash about everyone and anything. The market would be even more chaotic than it is today. So I'm very grateful that we have someone like him that, again, kind of just sticks to his job and doesn't comment about anything outside of what he is hired for. So was anything that was stated today new or a surprise? Not one bit. Jerome Powell has said this over and over again. So you might be asking, well then Ricky, I just don't get it. Why did the markets drop? Because the markets have been rising for no reason. But guess what? Even though that they're dropping a little bit today, markets overall are still incredibly bullish. There's a very large optimism that with Trump in office, it's pro-business. I think this is just more of a little reality check that it's not going to be as easy, but overall, markets are still incredibly bullish. So one retracement like this does not mean that markets are going to downturn for the next 2 months. I hope they do, but I don't think that that's what's going to happen. Markets are bullish for the reason that Trump is in office and they're optimistic that it's pro-business. And I think that that hype and that irrationality will continue. But that's why moments like this happen, because markets get ahead of themselves. And that's all. That's all it literally is. Nothing new was shared today. Nothing new was stated. It's been the same thing. It's just reiterating that, yes, we are not there yet when it comes down to cutting rates. So that's pretty much it. I think we have our new troll in the chat. And we got Dorothy. Dorothy says, I'm a subscriber. I can't believe you're talking to me like that. I don't care who you are, right? If you're going to share an opinion and you like to talk crap in the live chat, I don't care who it is that you are. Like I've said before, if you're willing to talk crap, I don't know how you were raised, but I don't go out of my way to talk negative about people. But I'm also not someone that if you go and talk crap about me, I'd be more than happy to throw it back. Dorothy, you brought up the Big Mac. I'm just throwing it back at you, okay? So I appreciate you guys' time. I hope that you guys enjoyed this little live session. We do have Meta and Microsoft that are set to report earnings today after the market closes, which is in the next 45 minutes. I'll leave it up to you guys. If you guys want me to go live, just get this video to over 1,000 likes and make sure you subscribe to the channel. Also, if you guys haven't done so already, I do trade live every morning. Please, if you're anything like Dorothy, do not sign up for LPP. But if you want to watch me trade live every single day, the second link in the description down below will give you the biggest discount that I offer. So I normally do this at the end of the month. Again, if you want to watch me trade live, one-time payment, lifetime access, it's I think like $334 off, something like that. It's nearly 50% off. And it's the first link in the description down below whenever it is that you feel like you are ready. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team. Hope everyone has a good day except for Dorothy. I hope they charge you $20 for your Big Mac, Dorothy.